Welcome to today's deep dive. I'm your host, and we've got a lot of ground to cover today.
Hey everyone, I'm the resident crypto expert here, and yeah, things are getting pretty wild out there.
They really are. So we are unpacking the brand new Vantage Plus weekly crypto analysis. This just published today, Monday, July 6th, 2026.
Fresh off the press.
Right. And for you listening, I mean, you've probably noticed the boards are just flashing green everywhere. The crypto market just added like $110 billion to its total valuation in a single week.
Which sounds amazing, right? Like a massive breakout.
Exactly. But this report is basically saying, hold your horses. Buying into this rally might actually be the most dangerous trade you can make this month.
Yeah, if you look under the hood, the market mechanics are telling a totally different story. We're looking at it's a highly fragile trap.
Okay, let's unpack this.
Yeah.
Because right now we're sitting at a $2.15 trillion total valuation.
Yep.
And the US dollar is weakening, which, I mean, that's giving tokens some room to breathe.
Exactly.
But isn't this early month rally kind of like building a sandcastle at low tide? Like, it looks great right now,
Yeah.
but it's completely vulnerable to the macro tides shifting.
That is the perfect way to put it. It's less of a genuine recovery and more of a vacuum effect.
Right, because when the dollar weakens, capital just naturally flows into riskier assets.
Exactly, by default. Not necessarily because crypto fundamentals have suddenly, improved. Historically, these early July technical pumps are just a setup for a really brutal late-month sell-off.
So it's not a rising tide lifting all boats. It's more of a temporary short squeeze.
Yeah.
Like, are retail buyers just providing exit liquidity for the big institutional players right now?
That's the real danger here, yeah. And the trigger that could pull the rug on this whole thing, geopolitics.
Always the wild card.
Right. The market structure is just incredibly thin right now. So a single flare-up in global tensions will send capital rushing right back to the safety of the dollar.
Which crushes Bitcoin first and then drags everything else down with it.
You got it. It triggers a cascade across the entire board.
Okay, so speaking of Bitcoin, let's talk about the heavyweights. BTC bounced off its 50-month moving average and reclaimed that psychological $60,000 mark.
It did, yeah. Currently sitting around 62,900.
Right. But the Vantage Plus report flags 66,000 as the crucial resistance level for a fresh run. I guess my pushback here is we're still down over 50% from the all-time high back in October.
Yeah, it's a deep hole.
So why should we even care about this specific 66K level? Is it just like a psychological barrier? Or are traders just using these mini rallies as an excuse to sell?
Well, it's not just psychological. It's entirely structural.
Oh, really?
Yeah, that 66,000 mark is where a massive cluster of underwater buyers from earlier this year are just waiting.
Waiting to break even.
Exactly. They want to break even and exit their positions. So if Bitcoin can't chew through that enormous wall of sell orders...
The rally just dies.
Right. This entire upward trend just becomes a liquidity event for those sellers.
Wow. Which leaves Ethereum in a really tough spot, I imagine.
Very much so.
ETH is hovering in the 1700s right now, like 1,766, and it seems completely dependent on Bitcoin's momentum. So if BTC hits that 66K wall and gets rejected, ETH doesn't stand a chance of breaking its $2,000 ceiling, does it?
Not at all. ETH is basically trading as a leveraged play on Bitcoin right now.
Right.
If BTC gets rejected, ETH isn't just going to stall out. It risks plummeting back down to retest its structural support around $1,600.
Ouch. And if traditional equity markets stumble at the same time...
Then that 1,600 floor could easily just give way completely.
Okay, so if the heavyweights are walking a tightrope, the altcoins must be at a complete crossroads right now.
Oh, absolutely.
Like, let's at XRP. It's trading at around 1.13. It pushed up early this month, but the volume feels suspiciously light to me.
You're definitely right to be suspicious there. XRP is going through a textbook technical retracement.
Basically an automatic bounce after being severely oversold.
Exactly. The data shows it absolutely has to clear 1.40 to prove this isn't just a fake out.
And if it doesn't?
If it slips below 1.02, the technical structure breaks down completely. That signals a fresh downward leg.
Jeez. And then there's Solana. SOL is at $80.20, and it actually pushed past its 50-day moving average, but it's totally boxed in sideways.
Yeah, it's trapped.
What's the actual mechanism keeping it trapped below $84?
Well, it's caught in this really heavy consolidation range. That $84 ceiling is where automated selling pressure just kicks in automatically.
Right.
To fly past that, it needs a massive, sustained influx of retail buying. to absorb all those sell orders.
And without that retail volume.
Without it, Solana is just going to bounce between 84 and its $75 support.
Yeah.
And if it drops below 75,
And the entire recovery narrative is invalidated.
instantly invalidated, yeah.
Wow. So the takeaway here for you listening is pretty clear. Don't let a green daily chart blind you to the broader structural traps, right?
Exactly.
From Bitcoin's wall of sell orders to the altcoins desperately fighting off technical breakdowns, this rally is just highly conditional.
Yeah, it really forces you to look at the macroeconomic strings that are, completely dictating the crypto market's movements right now.
Which brings us to the ultimate question. If this entire crypto ecosystem is currently living and dying by the strength of the US dollar and global geopolitical news,
Yeah.
does that mean the original dream of crypto as a completely independent, uncorrelated safe haven asset is actually dead?
That is the million-dollar question.
Something to chew on as you watch those charts this week. Thanks for joining us on this deep dive.